What is up, friends? Welcome back to another episode of Beards and Bitcoins, a crypto podcast for the man's man, with your hosts, BitBoy and J-Chains. Thank you so much for listening. Do us a favor, hit that subscribe button. This way you can stay up to date on shows, contests, everything else that we're doing. If you like what you hear, let us know. Please leave us a comment. You can also rate and review on iTunes. We sure appreciate your support. If you have any questions or interview requests, shoot us an email over at info@beardsandbitcoins.com. In today's episode, we're catching up with Jacob Canfield. Jacob is the co-founder and lead analyst at Signal Profits. He's going to talk about trading, using risk management to improve your positions, and so much more. So make sure you also watch the video version over on YouTube, as Jacob's going to throw some charts. This is a great, informative episode. You're not going to want to miss it, okay? Before we get into this episode, here's a quick word from our show sponsor, Monarch Wallet.
Monarch is building the future for those interested in one wallet that consolidates the best services and functionality into one simple and easy-to-use app. Monarch will empower users to control all aspects of their financial kingdom from the palm of their hand. You may have heard the phrase, not your keys, not your crypto. With Monarch, you own your keys and seed, meaning you own your crypto. With Monarch, you can store, receive, send, swap, buy, sell, and earn interest on your crypto. Track your portfolio, the news, the market cap, and more today. We're constantly adding new services and updates too. Learn more today by visiting monarchtoken.io or download the wallet for free today from Apple or Google. Hey everybody, welcome back to Beards and Bitcoins, a crypto podcast for the man's man. We got a lot of exciting stuff we're going to be talking about today, what we got going on next week, along with a killer interview from Jacob Canfield, talking about trading and, scalping and how to set your targets and things like that if you're into crypto trading. So definitely very, very interesting. So James, what is going on with you this week? How are you doing, bud?
Man, I'm doing all right. It's been my life outside of crypto has been nothing but insane. Got some crazy work things going on. The personal life has taken a whole new meaning and direction, so I'm super excited. Hopefully I have some good news in a couple weeks for everybody. For now, I'm just going to keep it close to the chest, but really just getting focused for Bitcoin 2019 conference, man. That's going to be coming up next week. We're going to be riding the Bit Bus from LA out to San Francisco. Super excited to hang out with the Satoshi droppers this weekend, and then be in San Francisco, baby. How about you? What's going on?
Yeah, man, I love it. Yeah, next week's gonna be really exciting. We get to hang in person, which is always fun. We're going to be going on the Crypto Bit Bus tour, which we sold out, by the way, at the last minute, which I predicted would happen. I knew at the last minute a bunch of people would come in. So the Bit Bus did sell out. We're going to San Francisco, Bitcoin Conference 2019. Real excited. Then Wednesday night, I'm leaving, heading over to Vegas, playing a little WSOP action. Bring home a bracelet. You know how it is.
That's how you go, man. Try to make that TV.
Yeah. Well, I mean, if they ever get a glimpse of me, I'm going to end up on TV. They might actually rig the tournament so I get to the end.
There you go. Are you one of those guys that plays with the sunshades on?
Sometimes I go back and forth. Like sometimes I feel like it kind of impedes my ability to look at my cards. Like sometimes, like online, I play with a four color deck. That's the best way to do it.
Mm-hmm.
Where like the spades are gray and the clubs are green and the diamonds are blue and then the hearts are red. But you can't do that in real life. In real life, you actually have to tell the difference between a spade and a club. So sometimes it's a little hard when you're wearing the glasses. It just depends on how I'm feeling. It depends on how the table is. But I'm pretty good at hiding. I got a good poker face, I guess, the long and the short of it. Sometimes I'm like Will Ferrell, though. I just don't know what to do with my hands. I don't know what to do with my hands. like this. So sometimes holding the hands may be a tell I've got. So don't tell everybody. But
yeah, just fold your fingers and there you go.
Is that the move right there?
That's the move.
That's the.
You can't be getting excited with your eyes like ooh.
Yeah, I try to do the same thing. So one thing I try to do is look at my phone. Like no matter what's going on, if I'm waiting on the other person's action, like I just look down at my phone, no matter what. Because I can like just pretend like what else is going on doesn't matter, and I just look at the phone, and that way they don't know if I'm, hiding because I'm happy or hiding because I'm scared because I'm bluffing or whatever it might be. Not that I bluff. I never bluff.
I thought that they don't like phones at the table.
Well, that depends on where you're playing. It really does. I mean, things have really kind of changed over the last few years because so many people like watch movies while they're playing and listen to music. So you're not allowed to necessarily like have it up on the table, like scrolling, but it like you put it in your lap and you just stare down at it, or it's sitting on the table and you just look at it, if that makes sense. Gotcha. But now if you're at the blackjack table or something like that, like there's strictly no phone. Like you cannot have a phone at all in any of those games. But in poker, sometimes it doesn't matter. It really depends on the dealer, how tight they call it.
That makes sense because I don't actually play poker. I wouldn't say that I'm the best poker player, but blackjack, that's my game. I'll sit there and play all night. And that's why I know that like you can't, phone, pocket, I've usually got like, the ringer off everything. Yeah. What's really funny is last time I was in Vegas, I was playing blackjack and got this, the Apple Watch, right? And it's funny, like if I made this crazy big bet, it would tell me that my heart rate was beating way too hard. And like the dealer's like, why do you keep looking at your watch? And I told him, it's like, well, it's because it told me my heart's beating a little too hard right now.
That's crazy. Yeah. We're moving to a place where, technology is so integrated with every part of our life that it's going to be almost impossible to tell people, not to have your phone anywhere,
Yeah. Wait till we have them just like a chip in your brain. You're like, answer phone calls, tap your forehead.
Or have a little virtual reality thing that goes on the side of your head so you can play Striking Vipers. So, do you know Striking Vipers?
I'm not a gamer, bro. I don't know anything about that.
It's not a real game, bro. It's from Black Mirror. It's a Black Mirror episode. If you guys have not watched Striking Vipers on Black Mirror, new episode, that you guys need to go watch it. It's really great.
Oh, Black Mirror. So you told me about this a couple weeks ago. Yeah. I'm two episodes in. This is like one of the craziest shows ever.
Oh, yeah. The new season, honestly, the new season's not the best season. But, the thing is like every episode is kind of its own little thing, so you don't have to watch any of the previous ones. Striking Vipers is a good watch, though. You should watch that before we go on the trip.
I will check that. Yeah, the last one I just watched was about the politician who had to have with a pig on live TV.
Yeah,
that was
scary. I will say this though: if you guys have watched Striking Vipers, it does not line up with a crypto podcast for the man's man. That's all that I'll say. But anyways, guys, so today we got a very special guest. We've got Jacob Canfield on for an interview. It's actually the first interview ever. Jay Chains, you missed out. Jay Chains actually isn't part of this. We all know that I'm the star of the show, so I went ahead and pushed forward, did the interview. Usually Jay Chains just, he, asks questions or, I'll say, Jay Chains, what's going on with this? And you'll just give a long pause. So we just decided to skip that.
Yeah. And, so usually I'm just here to look pretty, but that you sidestepped me the whole time.
It's true. It's true. Wow, we just got into a fight on national TV. So anyways, guys, but it's a very interesting interview talking about trading, a lot of very key points about trading and how to set targets and things like that. You guys know trading isn't something we talk about a lot on the podcast. Definitely not something I talk a lot about, on my channel, but it is really important. A lot of people are very interested in it. And to me, there's no one better out there than Jacob Canfield and also his partner that we had on the show before, Mark Moss. That was one of the best guests we ever had. So,
Mark definitely will be on the Bit Bus.
Yes, he will. Yes. I think you guys will get a lot out of this interview. But before we skip to the interview, before we check that out, got to give you guys a quick word from Monarch. So, wanted to let you guys know this. Monarch has a new white paper out. So they've changed a couple things. They have a token generation event coming up. You guys can see the new date on the white paper is May 29th. So it was redone within the last month. So if you guys have checked out Monarch, but maybe you don't, there's some things you wanted to brush up on or check out what they revised, you can do that by checking out monarchtoken.io. And then from there, you can get to the white paper pretty easily. It's just on the menu bar. You can see it right here, features, and then you can just go down to white paper. So really looking forward to that token generation event that's coming up very soon. Just remember, check out Monarch white paper. Hit it up.
There you go. A little bit more about Monarch. With the Monarch Universal Decentralized Cryptocurrency Wallet, you can buy and sell Bitcoin, Ethereum for fiat, and Bitcoin Cash with credit card. You can store, send, receive Bitcoin, Ethereum, XRP, Stellar, as well as all ERC20 tokens and more. All right, you can earn interest on select cryptos. So you can trade most ERC20 tokens via the ERC20 decentralized exchange. You can track your gains and losses, as well as review market data for most cryptos. Make sure you keep up to date on blockchain and crypto news, and you can maintain control over your private seed with the KeySync, which is compatible with desktop apps. And there is one KYC for all their services, so they make it real easy for you to really rule your own financial kingdom from the palm of your hand. If you got any questions or need more information, make sure that you visit monarchtoken.io today.
Yeah, and hopefully we'll be able to get another interview with Beatles in while we're at the Bitcoin 2019 conference. He's definitely going to come out for one day. So look forward to some more content with Monarch. Well, but now let's get into the interview with Jacob Canfield. Hey guys, I am joined today by Jacob Canfield of Signal Profits, also a well-known social media personality in the crypto space, here to talk to us about risk management, Signal Profits, trading, the whole 9 yards today. So Jacob, how are you doing today?
Good, man. How are you? Glad to be here. I haven't been on YouTube in a while. Took a little hiatus.
Yeah, that's good. I mean, I don't know about you. I feel like people really like it when they see my face. So probably when they see your face, they'll like it too. So, but anyway, so let's talk. So you are, what is your technical title with Signal Profits?
Co-founder and lead analyst. Depending on what's happening with the company. Sometimes I take a break from trading to focus on other areas. I'm kind of the talent scout, so I try and find the best traders in crypto and bring them in under Signal Profits so that we have some of the best traders available.
Yeah, that's good. Now I've known about Signal Profits, I guess, for maybe almost a year now, somewhere around there. I wasn't making a lot of money in 2017 on it like a lot of people were. But can you just tell us a little bit about why you started Signal Profits, like why you had the idea to start a trading group and things like that?
Yeah, so the concept behind it, how I got involved in crypto, I got involved pretty early on, mid 2016. And I did incredibly well. And I've actually had a private trading community for, pretty much all of 2017. I was in crypto for about 6 months, and then I started a private trading community. And a lot of it was friends, family, some doctors that I know, because I was in kind of a lot of groups with doctors. And a lot of them became millionaires in 2017 off of a lot of my trade analysis and in cryptocurrency calls. And so as time progressed, the reason I became kind of a social media person was I started seeing a lot of people start investing into a lot of scam companies. Even before BitConnect, there were other Ponzi schemes that had kind of come and gone, and they kind of, went to the wayside. But a lot of people got burned. There was US High Tech. And I started speaking out against a lot of these multi-level marketing crypto companies before it was popular to speak out against a lot of these multi-level marketing crypto companies. And so, that was kind of like my first impetus to get into just kind of broadcasting my thoughts. Started doing live streams to kind of warn people, saying, hey, if you're in BitConnect, I would definitely recommend getting your money out. And so that was the first part. But then 2017 came along. We saw this euphoric parabolic market. And I started really kind of warning people to take profits. I had a couple of friends that were, worth a couple $1 million. And, my common phrase, and you'll see me tweet this a lot, especially during bull markets, is if there's a single trade or investment where if you take profits, it will change your life drastically, then make sure you're taking profits, or at least take your initial capital out. So that was one of my biggest reasons for really starting the group, was to give education to new traders and investors in this type of a market. It's very volatile. It's very easy to become euphoric, to become emotionally attached to trades. People really, really like to buy rallies and sell and panic sell on candles. And so it's all about kind of educating and teaching context in the market, getting people to understand risk management, how to diversify the trades. And so that was kind of how Signal Profits was born. I went from this private group where everyone was telling me I should, create a public group to better educate and, give my specific trading analysis and calls. And so that's how Signal Profits was born. And it's evolved quite a bit since I started it. So it started kind of mid 2017. And so we're about 2 years old now. And we originally started as just a Telegram group. I think I was actually the second Signal group in crypto. I mean, you look at it now, there's, probably 200-300 Signal groups and people providing calls, but there was nobody doing that at the time. I think the only other person was like Asian Whales or, Palm Beach, Venice or something like that. But I remember that after I started doing, giving calls on Telegram, we rocketed out of the gate with a lot of members, and then it was just spawned a lot of other trading groups, and that's kind of where we got our start, really, pretty much.
So obviously during the last market or the last bull market in 2017, really 2017, people were making a lot of money. Really, they lost the money in 2018. That's the truth. And so, you had kind of mentioned that, people don't necessarily know how to sell the top. They don't know how to take profits. And it really goes across the board, not just in crypto, but I think about like playing poker at the poker table. Like I love to play poker. I'm going to play in the WSOP actually right after the Bitcoin 2019 conference in a couple weeks. Really excited about it. Whenever I'm playing cash games, I never know when to get up from the table. You get some wins, and you start thinking like, oh, the wins will never end, and I'll just be able to build a stack up until, for eternity because I'm running over the people at the table or whatever it would be. And I kind of see the same thing in crypto. It's like you get a coin that starts running, and it just seems like it's going to go forever, and people have no idea when that spot is to, take their profits, I guess would be the best way to say it. So, risk management is something that's really important, obviously, with people's trading portfolios. We don't talk about trading a lot on the channel, but it is something I want to get more into. That's why I'm doing my Journey to One Bitcoin section. Obviously, people watch my channel know about that. So what Jacob, can you tell us about risk management and how people can kind of, mitigate how much they can lose?
Yeah. So first off, the biggest thing with risk management, when it comes to trading, there's a lot of aspects to it, but the most important thing is that the amount that you're trading with is enough that you can afford to lose it. And I would say anybody aspiring to be a full-time trader, I would recommend always having a job first until you're consistent enough to be able to make a full-time at trading. A lot of people, they get a couple of key wins and they think that, I'm just going to quit my job. It's so much easier to trade when you have a backup job. I've been a full-time trader for over 18 months now in crypto and stocks. And it's so much easier when you have a backup plan because trading is not easy, right? So 90% of traders fail, and there's a reason why 90% of traders fail. And a lot of that comes down to risk management. If you follow some of the greatest traders in the world, they lost almost all of their portfolio at one time or another. They went bankrupt or they burned their account. And I mean, these guys had $100 million and they went literally all the way down to zero, some of them. And it's mostly because they go too heavy in a position. So they go all into one trade, all into one coin, no stop loss, or they average down losers. So I'll get into some of the terms behind risk management. I know you wanted me to kind of do some of this stuff.
Yeah.
So anybody that joins Signal Profits, this is one of the first things that we go over. Are you looking at my portfolio screen right now?
Yes.
Or okay. So here's some of the terms that anybody that's trying to trade, even investing, you guys should be familiar with. And so there's portfolio. That's basically the total amount of money that you plan on trading with. And you don't necessarily have to allocate all of your portfolio to trading. You can also have part of your portfolio for investments, long-term projects that you're interested in. So Bitcoin, Ethereum, some of these new IEOs. There's lots of good long-term projects out there that exist, and maybe setting a certain amount of portfolio into that. If you're new to trading, I would recommend allocating a smaller portfolio size so you have less pressure and less risk. And so risk per trade is the total amount of money that you're actually willing to lose on that trade. And so a lot of people get confused with the risk per trade and position size. And I'll kind of go into those. But basically, if you have $1,000 and you want to risk 2% on the trade, that means you're going to risk $20 out of $1,000, as that's the total amount of money you're going to lose. If you want to lose 20%, you're going to risk up to $200. And those things are kind of interchangeable, but those are the big things that you want to know between risk portfolio and risk per trade. drawdowns and recovery, this is really important for anybody that survived the 2018 bear market, which I'll go over a little bit more. And then the stop loss is the risk percentage of the trade. And it gets a little bit wordy, but I'll kind of cover those. And then the position size is basically the total number of lots or contracts that you're going to buy. And there's a calculation between your portfolio size, your risk per trade, and your position that'll give you all of that information. So I'll go over that formula, and I don't want to make this too boring for your members, but the biggest thing to understand also is win rate and risk reward ratio, and understanding how those two things work together. Because some people see traders, you can basically lose 70% of your trades and still be a really, really profitable trader. And some people don't really understand how that even works or that entire concept. So I'll go over some of that with your members or with your watchers, so that we can so that they can learn a little bit more about how those things work, or how they can calculate out their trades to make a little bit more money. So when it comes to portfolio, I already talked about that, but that's basically how much you're putting in. With a small portfolio, you want to know what your win expectancy is so that you can actually increase your position size. Because with a small portfolio, it's really hard to make a lot of money if you're only using very, very small percentages of it. And so understanding how to use that is very, very beneficial. And large portfolio, the biggest thing to know with a large portfolio is you don't really want to play those small illiquid shitcoins on Binance that have volumes of 5 to 20 Bitcoin in a day, because it's really hard to get out of those positions. Yeah. Like if you're going in with like 10 Bitcoin, the biggest thing is if you buy something, you need somebody to sell it to. And so if it's got a small volume, it's really hard to get out of those. So larger portfolios, I recommend sticking to the top 20, 30 coins in the market and understanding and learning how those ebb and flow. So the risk per trade is basically the amount of money you're willing to lose on the trade. And so recommended risk per trade on average is typically 1 to 3% of the entire portfolio. Most traders typically do 1 to 1.5%. And now a lot of people really get this confused. And this is where I like to really clarify that. When people think of risk per trade, they say, you hear all these people on Twitter, they kind of parrot the same thing. They say, only put 2% of your capital in the trade, or only risk 2%. When people hear that, they think, okay, I've got $1,000, so I can only put $20 in this trade because, that's my risk on this trade. And a lot of traders, they kind of even say this, newer traders, they never really fully grasp this concept. If you're putting $20 into a trade, you're never going to make money. What that means is you're willing to lose 1 to 3% of your capital on that trade. And so I don't recommend going to the 3 to 4 to 5% risk. I recommend keeping it at 1%, and I'll show you how to calculate that, where you can actually use your position sizes accordingly, but still manage your risk appropriately to make consistent money and make a lot of money. Okay, so amount risk changes. So yeah, so this basically, 1% of your $1,000 is $10, 1% of 5,000 is $50. So this is basically how much percentage of all of these that you can risk. And I'm not going to go through all of this. Anybody that signs up for that trial that you were talking about, they get this whole video where I cover all of this stuff. Stop losses, if you're not using stop losses yet, I would highly encourage you to get start using them. Binance does not have the ability to set stop losses and targets yet. But what I will tell you is that, a lot of people, when they start using stop losses and their stop loss gets hit and then the trade runs, and they get really frustrated. They say, I'm never going to use stop losses again. Well, the problem is anything can happen in a trade where you can see it spike down, 30, 40, 50% in the matter of a day or two. So we want those stop losses because that helps us manage our risk and keep our risk per trade to where we want it to be, right? So we don't want it to go to, we don't want our risk per trade to eke up into the 8, 9, 10, 12, 15% range, because then it becomes really, really hard to recover in trades like that.
Well, and plus when you factor in sometimes like flash crashes and things like that, the stop loss would protect you in that case. I mean, we saw I think it was on.
There's a ton of them, man. Waves. I remember Ethereum flash crash on Kraken and went all the way down. I mean, there was a Canadian dollar on Bitcoin. I think it went all the way down to $100. Yeah, I mean, so those flash crashes are, they're intense. And so I think I was reading somebody on Twitter that they were in BSV and there was a flash crash and their account was on cross margin and it just wiped out like 12 Bitcoin in their account because it market sold at the bottom on it was like a low margin trade, like 5X. And, that's where margin trading, you really have to, you can't just set and forget margin trading positions, whereas on Binance, like, those types of trades, it's much easier to set them and forget them. So this is the drawdown and recovery chart that I like to, really, really highlight. And I think some of these calculations aren't 100% accurate, but basically the moral of this story is if you hold a position down to 90% loss, you're going to need a lot of gains just to get that 90% loss back. And so this is where, risk allocation is really, really important. Whereas if you're just taking, 4 to 7% losses on trades, it's really easy to come back from those, especially in crypto where it's so volatile. And so this is the most important thing. We'll talk about position size, and then I'll talk about win ratio and risk reward and how to calculate those. But I think with position size and the understanding position size and then win rate and risk reward, I think just those two concepts, if your viewers can really understand that, it'll really kind of change and revolutionize the way that they trade. So position size is the percentage of your portfolio that you're going to risk when you factor in your stop loss for the trade. And this can also be an investment, right? If your investing thesis is that it's, we've hit the bottom and blah, 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 you can cut an investment if it breaks below a certain level as well. I mean, this doesn't have to just apply to trading. So what you do is you divide the money amount by I'm just going to show the formula, but basically here's the position size calculation. So your position size is your portfolio times your risk percentage. So that's that 1 to 2% divided by your stop loss. So I'll do a calculation. So if you're trading Bitcoin and all you want to do is risk 2%, you're going to take $10,000 if that's a sample size portfolio, multiply that by 2% risk, and then divide that by whatever your stop loss is. So if let's say our stop loss is 4%. So what this gives us is it gives us a position size of $5,000. So basically 50% of our portfolio we can use because our risk is 2%. And then our stop loss is 4%. And so all those work together to give us that perfect position size. So we can basically use 50% of our portfolio. But the nice thing is we're only risking 2% on this total trade. So let me show you how this works. So position size is 5,000. Let's say our entry price is $3,500. When I did this slide, this would be a really nice trade, right? But $5,000 to calculate this out, you're going to take 5,000 and then you're going to divide it by the entry price. And that gives us the total amount of Bitcoin that we're going to buy with our US dollar. Now I'll do this a little bit different. This is basically in Bitcoin. So 5 Bitcoin and our risk is 2%. So our total risk on this is going to be 0.01 Bitcoin or 0.1 Bitcoin out of 5 Bitcoin. So basically we take 5 Bitcoin, multiply it by 2% risk, divided by 5% stop loss, and it gives us the total position size of 2 Bitcoin. And so we can use 2 Bitcoin total up into this trade. And so this is how you could calculate it on like some of your trade setups. And I mean, I can talk about trade setups and all that stuff, but so then we take that same thing, position size, divided by our entry price, 2 divided by 8,500, and that gives us 2,352 Ripple. And so this is a very simple way to calculate our contract size based on the amount of money that we're going to put into the trade. So does that make sense? Do you have any questions on that?
Yeah. So basically when, you're trying to figure out, the percentage of your portfolio that you want to use. I'm trying to read between the lines here on what's being said.
Yeah.
And you figure out like how much you want to risk. You factor your stop loss into that. So you may not be using, like, let's say I want to use 10% of my portfolio on a specific trade. And
let me share my screen, and I think this will make a lot more sense.
Okay.
I'm just gonna show a chart, and this might make a little bit more sense of a recent trade we just took. Let me just close out some of these screens real quick, and then I'll even show it on Signal Profits, and I'll show you how I would calculate out my position size. Okay. So let me.
Yeah, because I've just realized I think I've been doing my position sizes completely wrong.
Yep. And that's okay, man. And this is why you have me on your channel.
Right.
So let me share my main screen here. Okay, perfect. Can you see this chart right here?
Yes.
Okay. So if you take a look at a recent trade that we just took, so let me refresh here. So entry was 175 to 177. So very, very tight entry, and our stop loss is 3%. And here's our first target and here's our second target. So let me show you how we can calculate this. So if you're on Binance and you've got, let's say And there's a really cool little tool over here. So if you bring this out, it has long position. See that?
Mm-hmm.
So if you're on TradingView, you can actually use it. So our entry was 175 to 177. And so let me show you how this tool works. So this is the long short ratio. So our stop loss is 3%. So I'm going to show you exactly what this looks like. So 170 was our stop loss. So I'm going to drag this up. Let me move this over here. So I'm going to drag this up to done. So 170 right here. And let's say our entry was 176. So average between 175 and 177. So you can see my risk is 3.41%. And then my first target is going to be 193. Okay. So 193 is my first target. So it gives me a 9.66% profit take, right?
Right.
So what I can do is I can actually change these settings. Oops, let me see. Okay, so my account size is $10,000. My risk per trade, let's say I want it to be 2%, okay? So what this will actually show me is I've got a risk reward ratio of 2.83, and then my contract size is, or my position size down here is showing 9,800 because of the stop loss and the risk associated with it. And you can also take that down to, let's say 1%. So this has, you know, and if I move up this risk a bit, it'll show you how much the position size is with the risk. So this just shows you if I'm just risking 1%, let's say I'm just risking 3%, this will show you how much I can put into the trade, but that's not factoring in the stop loss. So to factor in the stop loss, we need to use that formula that I gave you. So this shows you the top number, right? So the 5 times 0.02, you know, so 10,000 times 0.03, so it'd give you 9,700. And then you get the stop loss percentage factored into that, so the 3%, and that's where you get your lot and contract size. But so essentially, if I was going to take this trade, if I was going to use one Bitcoin, okay, so I'll just do this all out. So if I'm going to use one Bitcoin in this trade, where my stop loss is 3% and my first profit target is 9.66%, the target doesn't really matter. It does for risk reward, but for just for this trade specifically, 3.41%. So one Bitcoin, right? And we only want to risk, let's say 0.02%. So we're going to multiply that by 0.02. Oops. 1 times 0.02. Okay, so 1 times 0.02 equals. Okay, so we got 0.02. I guess, yeah, makes sense. And then I was like, I kept pushing equals. Divided by 3.41. Sorry, clear 0.034. Okay. 1 times 0.02 divided by 0.034. So that's 3.4% equals. And so out of one Bitcoin, I can use 0.58 Bitcoin for this trade.
Oh, see, so I've been sizing mine way too small. I see now.
Yeah. So
yeah. See, I didn't.
This is
I
if
didn't
you just take one trade, though, right?
Yeah.
But what that does is, so now you've got 0.58 Bitcoin in this trade. So if you hit the profit target at 9.66%, right? So then you multiply by 0.096. So then you've made 0.05 Bitcoin off of that first trade that you made, right?
You made 5%
so,
right there off the rip.
Yeah. So you made 5% of the total portfolio on one trade while only risking 2% of your total portfolio.
Yeah.
So if you can average up those position sizes and, you know, continue to grow. So now for the next trade, let's just look at the next trade. So let's say you take ZIL on the next trade, and I'll just do this full thing. I think this helps a little bit more instead of just kind of a PowerPoint slide. So let's say Zilliqa, right? So the price is 296. You know, we want to get in 293 to 295. So very tight entry. And it's got a 6% stop loss. So this is a little bit looser. So I'll show you what a looser stop loss will look like with a different position size. So if I go to Zilliqa, okay, so now on this trade, you know, so this is what I'm seeing, right? So we've got this higher low right here. So it's moving really nicely. So I'm looking for like a wedge break. We bought 293 to 294. So we bought on this lower trend line here. So that's what I'm looking for in this trade. We've got a little bit of resistance right here, but you know, we're hoping for when we get to this apex, we move out of this and we push to our target. So we've got this trade right here. Okay. We're going to do the exact same thing. We're going to calculate all of this out. Does this help? I mean, this probably makes
this is good. I like that. Yeah, this is good for sure.
Probably makes a little bit more sense.
Yeah.
So when we look at Zilliqa, our stop loss is 275. Our entry is 293 to 295. So we're going to drag this down, right? 295, and then our stop loss is 275. So this is an invalidation level, right? I mean, if you want to go really tight, you can set it right here, but we might get wicked down or something like that.
Yeah.
But so we've got a 6.78% risk, and our first target take is 324, which is right at the top of this resistance right here. So you can see why our target was right there. So 9.83%, 6.78%. So this doesn't have quite the 2-to-1 risk reward. Most of our trades typically do. 1.545 R, which is our risk reward. So let's calculate this out. So if we're going to do, now we've got 1.05 Bitcoin for this trade, so it's going to change it a little bit. So then what we're going to do is we're going to multiply this by the same thing. We're only going to risk 2%. And then we're going to divide that by our risk down here, 0.0678. And so that gives us a position size of 0.309 Bitcoin. So because our stop loss is higher, we have to allocate smaller position size to keep our risk down to 2%.
Yeah.
And so on this trade, 0.309, if we hit that same 10%, then we're going to make 0.03 Bitcoin. Okay. So the goal is, though, as we compound these, right? But if we just had a risk of, let's say, 1.7% here, if we bought on this trend line and then our risk was like, let's say here, 2%, we can allocate the same amount that we did on the last trade. This is 2%. That's exactly how much we want to risk. We can put our whole portfolio in this trade now. So we can put a whole Bitcoin in this because we've got a 2% stop loss here. So that's how you can use position size, risk per trade accordingly to really grow a small sized account effectively. And so, a lot of traders, if they have a small portfolio, they just keep their risk really, really tight. So they try and find setups where they don't think it's going to hit their stop loss. So they'll use a 1.3% risk. Margin traders, as a margin trader, if I'm going to trade Bitcoin, I'll use let's say a 15-minute chart, and I can find patterns all day with this, so right now I can see I've got a trading range right here. So what I can do is I can try and, let's say I'm using like 10x leverage. Well, that multiplies everything by 10x. So let's say I'm at the top of this range and I want to try and get in on a trade here. Well, I can just aim for, let's say, 0.5%. My position size, my risk is 0.27%. And then my target is 0.52%. But at 10x leverage, now my risk is 2.7%. And my profit take is basically 0.5 times 10. So it's a totally different ball game when you're talking about using margin, but it's the same concept, right? So you're just basically changing these levels and variables down to make more sense. So if I'm trading any of these ranges, we just basically change these numbers around to kind of accommodate for it.
Yeah. I didn't even know you could really, when you were saying risk, you had texted me about this a couple days ago, maybe it was Telegram, whatever it was. And you were saying divided by the risk. I didn't even really, I was just going off of the percentage that was in, the stop loss percentage that was in signal profits, not necessarily trying to factor out this big equation. So So that's the difference between risk per trade and stop loss. And a lot of people, especially when they're starting out, they don't really even understand those two concepts are even different. But it allows you to manage your risk much better. So all these concepts apply the same. So like if you were going to take a short position, same concept applies, right? I mean, a short position is basically where you're betting against the price of Bitcoin. Almost the exact same concepts as what we just talked about. It just inversed.
It's just inverse. Yep. Yeah. Same exact concept, but we're going to use position size and risk, all those same things to grow our portfolio even better. So the other big thing though is that I think that your viewers really need to understand when it comes to, let me share my screen. Any questions on that? Do you want me to do like a couple?
I'm going to ask you a really super noob question that
Yeah.
I really want to know the answer to, and I can't figure it out. I've been watching the show Billions. You watch that show?
Yeah. Hedge fund, Bobby Axelrod.
It's a good show. And you know what's interesting is I've been watching it. Me and my wife have been watching through it. And like, if I would have watched this 5 years ago, I would have had no clue what any of it was about, But now after being in crypto and exposing to a lot of trading and things like that, even though it's, they're doing stocks and things like that, I understand it better. But my question is, like, it's when you're leverage trading, it's easy for me to understand, how you make money on a long position, because you're basically, leveraging Bitcoins and you're able to take profits when the price goes up. When you short something, where does the money come from? Like, how are you making money on a short, which basically just means you bet the price is going to go down? Like, who is losing money in that deal?
Yep. Let me show you. Let me show you my screen, and I'll explain it. Because I mean, I could just do a whole video on what the hell is a short, right? Because I see everybody talk about it. They don't even really. I feel like they're not really even confident in what they're saying. So a short. If I'm going to short this stock or Bitcoin
asset, yeah.
Okay, whatever this is. If I'm going to short this, what I'm doing is, let's say it reaches here, $8,000. What you're doing is you're actually borrowing from the exchange, and you're basically pre-selling Bitcoin at this price. So you're selling to the broker, to the exchange, you're selling Bitcoin to them, but you're borrowing a cash position.
Oh, okay.
Okay. So let's say I'm shorting this position. So I'm shorting at $8,000, let's say a 2 Bitcoin position. So what that means is I sold the exchange 2 Bitcoin for a position. Okay. Now, if the price goes down, then what happens is I buy back my position and I profit.
Oh.
Okay. So
you're making the difference. So you're really making the difference between the original position and then whenever you stop it out.
Yes.
Okay.
And
that makes sense. Okay.
So essentially you're selling an asset that you don't actually have.
Yeah.
Okay. But I mean, you're not just selling it to the exchange, you're selling it to but you're borrowing. If you're on margin, you're borrowing money on your position. So like, let's say I'm 10X. And if you want me to go into this, I can, but so if let's say I have $1,000 in my account, a 10X position means that I can trade as if I have $10,000 in my account.
Right.
So if I go short 10X, let's say, I have $1,000, I can actually go short $10,000. So I borrow $9,000 against a base value, which is basically like the margin that I put up of $1,000, betting that the price is going to go down. And so I sell that Bitcoin to somebody, okay? And then as the price goes down, I buy back that position and I profit off the difference. And then I give the exchange basically the money that I just borrowed. So I borrowed 10 grand. Let's say that the price goes down 1%. So I just made 10% off of a 10X trade. So that means I basically just profited 10% on that, full margin move that I just made. So margin, you can make a lot of money very quickly because you can trade a lot more than you have in your account. If you have 1 Bitcoin, you can trade up to 100 Bitcoin on BitMEX. But your margin of error gets very, very small because the more you leverage, the smaller and smaller and smaller those windows become of what they call liquidation. And liquidation is where you've borrowed too much to where you can't pay it back in your account. So they take it out of your account. But you can't lose more money than you have in your account. That's one thing that a lot of people get confused. You can't borrow money you don't have in your account, right? So if you have 1 Bitcoin, the most you're ever going to lose is 1 Bitcoin.
Right.
You can't go negative.
Right.
There's no, you can't borrow money that you don't have. Right. So a lot of traders, they hear all these, oh, you're borrowing money. That's not how it works. You can't borrow more than you have to lose. You have to have some stake in the ecosystem or in the exchange. So let's say you got 0.1 Bitcoin, you can borrow up to 1 Bitcoin on 100X whatever. So that's a big misnomer that a lot of people need to understand. But, you know, if you want to do a whole video on margin trading, I'd love to, you know, because a lot of people get confused on it. I do all kinds of different margin strategies, from scalping on high leverage to hedging my assets with a 1x short. Like if most people just knew what a 1x short was, let's say you're a long-term hodler, right? This may be something cool. So let's say Bitcoin gets to 9,000. Okay. This will make really a lot of sense for a lot of your viewers. A lot of them are probably hodlers. Is that accurate? So let's say you bought Bitcoin at $3,000, right? And Bitcoin goes all the way up to 8,000 or 9,000. It's a resistance level. Everyone's super bearish on it. Well, what you can do is you can just, if your money's on a margin exchange, you can take a 1x short, which is basically like you're in cash. It's basically like you sold out in cash. But what you can do is you can set like a very small stop loss on it. So if you're on a 1x short, what that means is as the price goes down, you're actually increasing your Bitcoin value because you're making money as it moves down. If the price moves up, that means you're not making any money US dollar, but your Bitcoin value is going down slightly.
Yeah.
Does that make sense?
Yeah, it's kind of like almost a no-lose situation.
Yeah, I mean, well, the only time you lose is if you go up and hit this stop loss. You're going to lose about 2% of your Bitcoin that you're hodling. But at the same time, if the price goes down, you're going to make a lot. So let's say you bought at 10,000, it goes to 20,000. Well, now you want to take a hedge out. All of the whole move down from 20,000, you would have been making Bitcoin because you would have been profiting as the price went down. And so your USD value would basically be relatively the same, because as it's going down, your Bitcoin value is going up, but the US dollar is going down. So it's just a hedge. It's just hedging your portfolio. And I can go into that a lot more detail, but yeah, I mean, does that make sense?
Yeah. And I think how much, like, let's say somebody, I know there is a guy who did it, you know, he shorted Bitcoin when it hit 19,000 and he shorted it all the way down to 3,150. And then he pulled his position out. Like, how does that work? Like right now, if you feel like Bitcoin is going to go, you know, to $100,000, right? And let's say you took out a position, you know, I mean, we know it's fluctuating right now, but let's just say this is the last time, once we get over 8, we ever see the 7,000s again.
Let me show you something. Let me show you something really quick.
Okay.
A lot of people get confused on that. Anybody that bought at 3,400 made double the amount that guy made shorting the market.
Oh, really?
If you shorted from 20,000 to the money, okay, all the way to the bottom of the market, you made 85% on that trade.
Oh, well, it's not that great, really.
It's not that good.
Yeah, I mean, it's okay. I mean, but it's not that great. Well, okay, what about the inverse? What if somebody?
But if you were on a hedge, right? If you hedged up here on a 1x short, what that means is your USD value declined dramatically, right? So, or I mean, it basically stays the same. So if you had $100,000 portfolio in Bitcoin and you hedged with a 1x short, well, all the way down, what that just means is you just made 83% more Bitcoin on your hedged position. If you're on a 2x short, well, now you're talking 160%. If you're on 10x, well, now you're talking, you know, a massive 830% trade.
What about 100x? That would be.
Yeah, that's an 8,300% trade. And that's how some of these people on BitMEX can accumulate wealth so quickly. But so if you shorted all the way at the top, all the way down, yeah, you made 85%. If you longed anywhere in this accumulation zone right here at, let's say 3,000, even 4,000, you just made 100%.
Yeah.
It's much more profitable to long, in my opinion. I mean, very few people get really rich shorting the market. I mean, if you shorted here, then you shorted here, then you shorted here, then you shorted here, you know, now you're talking about accumulative gains. But I personally mostly like to hedge my position rather than taking like high leverage short positions. I mean, unless I'm just like bored and scalping or something like that. But does that make sense?
Yeah. Hey, speaking of scalping, do you scalp the IEOs when they come on, when they get launched on Binance? Because I don't even have any idea what I'm doing when it comes to trading, but I can scalp the crap out of those IEOs once they launch. Even I made, you know, I think I had about, you know, $2,000 and I was able to scalp like $1,000 on Harmony when it launched. Are those easy money opportunities you feel like?
Yeah, let me show you what let me show you a few trades that we've made in the past. So if you look at T Fuel, its first launch, what you got to do is, instead of looking at 1 hour, 4 hour, 12 hour, you got to get down into the 15-minute, the nitty gritty, right? So this is like, you know, the real small time frames, because you don't have any data, so it's really hard to know, you know, how these should trade. So when you're on the 15-minute, what you can see is we come down and we formed a little bit of a reversal, like a little bit of a double bottom on this lower level. So you could always enter a trade here, put a stop loss down here, so you know your risk is 7%. You come up here, you formed a falling wedge right here, which is you know, basically like a falling wedge / bullish pennant. So again,
that's just hitting three spots diagonally. Is that?
Yeah, so you got 1, 2, 3, and then you've got 1, 2, and you know, basically forms this kind of W structure again, but lower highs, lower lows, but the volume as it's going down, you can see the volume's falling. That's bearish. So as price goes down against like an impulsive move, that's bullish, right? So meaning the price should continue up. So here, and you can see how it's hugging the resistance up top here. That's usually the sign of coiling and a breakout.
Okay.
Right? So you can enter on the breakout move with a stop below here. You can enter, I mean, there's lots of different ways to do it, but what you have to do is you have to use these smaller time frames. You can't use like the hourly or whatever.
Right.
Now, again, over here, you've got a bit of an ascending triangle pattern. And, you know, these are different patterns that you can find, but, you know, it breaks out, and that's a classic breakout retest. So here you can enter into a position in this point, and then you can put your stop below the base of this triangle. Whoops. Put the base, you know, you put your stop below the base of this triangle. So your risk is 9%. So again, you have to allocate your position sizes, but you know, not all of these do really well, right? So if you look at Sealer.
I thought it was Seller. It's Sealer, huh?
I don't know, whatever you want to call it. I don't even. But if you look at its listing, when it first was listed, look at that massive candle there, and then it came out here. Now here's how you could try to trade this, but you would have been stopped out, right? So you've got basically a triangle formation, a completely symmetrical triangle, and the thing with symmetrical triangles is you don't want to enter. You want to enter on confirmed breakout. That's almost all triangle patterns. So what you want to see is something like this, where it breaks out and then it retests. That was what I just showed you on T Fuel. In this case, it broke down and it never even came back to retest. Maybe if we zoom into like the 5-minute.
Yeah.
But then it comes down, and then it comes up, forms a trading range, and then it just continues to, you know. So some of these on listing, they're not great to enter. You know, and here was when we started to get a really strong base. We started to get some divergence. This was when I said we need to start accumulating, because we had some really strong volume, and that's where we had this massive breakout. We're currently in this trade right now,
yeah.
And I think it's up. I think we bought in the 530 or 230 range, but right now it looks like, you know, we're forming a bit of a flag pattern here. And so you can see the top line resistance here. So even if you entered here, what you can do is you can just set your risk and your stop loss down here. So there's lots of different ways you can trade these, but the most important thing is if you're new and you're new to trading, buying something right out of the gate is not usually the best strategy. You know, this one went straight up and then it went straight back down.
Yeah. I bought in at 170, I think 170.
On one?
Yeah. I bought in at 170. I missed buying
you bought
in
it here, like on the listing. Oh, okay. Yeah.
So I bought it there. I sold it at about 300. Bought back at about 240, and then sold. It hit my sell order about 300 a few days later. You know, so
very nice. This is actually looking really strong. It's got.
I try to judge it on hype. You know, like with one and or Harmony. One is the ticker. And with BTT, those are two that I had so much hype on them. Both of those I bought right when it launched and was able to do very well with, you know, over the weekend on both.
Yeah, there's lots of ways to approach the market, right? So there's technical analysis, fundamental analysis, sentiment analysis, you know, and I like to do a hybrid of all of those, right? We're both on Twitter, we know what people are shilling. So I like to take that same approach myself.
Yeah, I think it's good. I mean, you got to factor a lot of things in. I think some people live and die by the charts, and there are other things outside of the charts that can affect the price. I mean, we know that obviously. It's weird. Like the more bearish Bitcoin got, the less that was true. But yeah, so right now on my channel, I'm doing a segment called Journey to 1 Bitcoin, where I started with zero point 0.3 Bitcoins, and it's up to about 0.35 now, moving up towards 1 Bitcoin. Maybe after I hit 1 Bitcoin, and of course, this is using signal profits, calls, and things like that. This this interview is not sponsored, by the way, if anybody was wondering.
Yeah. I don't sponsor anybody.
Yeah. So
I've actually never, we just actually started running paid ads. I've never actually ran an ad or anything. We just started that in the last like 3 weeks. Never paid anybody. It's all been completely organic and, just people that get good results. And I will tell you, disclaimer, we're not going to have 100% win rate. Probably 60% is our average month in, month out. I've had, a couple months where I was 80, 90%. And we have had losing months. Last year, May was a losing month and November was a losing month. So, come in with the expectation that not every trade is going to be a winner if you, practice risk management. I don't pretend to be a 100% win ratio trader. I talk about my losses on Twitter all the time and on YouTube. And I think that's the biggest thing that people come in is they have this, this expectation that every trade is going to be this massive winner. And, sometimes we make mistakes where we'll close a trade and then all of a sudden it'll run, these things happen. That's part of trading and whatnot. But so I like to say that. I like to keep it very real, very realistic. But yeah.
So after I get that Bitcoin, after I move from 0.3 to 1, hopefully it won't take too long. Also, I was trading in November. That was a terrible month. But so after I hit that, maybe I can start a new, a new segment where maybe I can go more in depth with margin trading. We can have you back on to talk about margin trading again and, the best way to make gains with that. And
yeah, I would love it. Margin trading is not for the amateur, and a lot of amateurs go in there and it's, they call it BitMEX wrecked for a reason, right? They always start out with 25 to 100x. They get liquidated their first month and, they never go back to margin trading, or they learn to use 3 to 5x. So I would say if you're going to margin trade, start with 3x to 5x on a small account till you build up. You can also use test nets on BitMEX. But yeah, man. So one thing I also want to talk about is with signal profits, with trading in general, expectations of gains, right? So 0.3 to 1 Bitcoin, that's a 300% profit return.
Yeah.
That's really, really astronomical when it comes to trading just in general. I mean, if everybody could just 300% their portfolio, that'd be, really, really amazing. And so when it comes to trading, what I always talk about with crypto is I love crypto because the gains are so massive, because it's so volatile and it's a trader's paradise. But have realistic expectations about what you should expect to grow each month. I shoot for myself 15 to 20% of my portfolio growth. And usually when I hit my trading targets, I just stop trading because I don't like to give my money back to the market.
Yeah.
But mostly because I like to take breaks. I don't like to burn myself out with trading. A lot of people, they just trade 18 hours a day, 24/7. And I would say they're over trading.
So much. Yeah.
Yeah. And so, but yeah, so, realistic expectations, in the stock market, the best returns you're going to get are, 6 to 7% per year, not per month, per year. And, commodities and Forex, maybe you'll hit that 15 to 20%, per year. But with crypto, you can really do 100%, 200% per year. Some of my traders and analysts are up. I mean, I think some guy just wrote a testimonial. He's up 6x in his portfolio in the last 2 months trading signal profit signals. So, it's possible, but you have to really, really manage your risk, really well, so you don't get wrecked on one trade or one signal or something like that. But
well, I have no time frame. I have no timeline. Just whenever it happens, it happens. If it's 3 years from now, then that's what it had to be. So, it's possible though. I know it's possible.
Market, there's a lot of structures that are looking really, really bullish. With this market, I think you can probably hit that in a month or two. And that's fairly unrealistic just in terms of like what traders can do. But this market,
what you should expect.
It
is possible. Yeah.
But this market is really, really setting up for some really nice profits and gains.
Yeah. What do you think? Last question, and it's totally off the wall question. What is your guess for end of the year this year? Like if you were to just say, where do you think Bitcoin will be at the end of the year? I know it's just a wild guess. You probably have a little more.
I think we'll eclipse all-time highs.
I do too.
Just the way that the structure is setting up.
Now,
would
you have said that? Would you have said that 4 months ago?
100%. Yeah.
Oh, you still thought
Did you follow my TradingView charts at all?
Not that close.
Let me show you a chart real quick.
Okay.
You'll get a kick out of this.
I did say in January I was saying the bottom was in December, but I still couldn't imagine a scenario at that point where by the end of this year we would be, back to all-time highs. I've really changed on that over the last 2 months. If
you guys are on TradingView, make sure you follow me. I'm one of the top authors on here. I publish all of my trades a lot, but this was probably like the funniest chart I've ever posted. But this was December 15th, 2018. I said I drew a giant magnet to save us all. The reason why I drew this chart was because of the 200-day moving average on the weekly. And I basically said every parabolic, bull run has started off of the 200-day moving average on the weekly. And I basically said I drew a giant magnet to save us all. You could see the price was 3,236.
It was pretty close.
And I just wrote hold, kind of funny. But basically, end of year targets, 3,250, 4,000, 5,000, 14,219, $51,249. And then the U.S. GDP, the entire money supply of the world intergalactic monetary system. And what happened was we bounced perfectly off that 200-day moving average, and now we're retesting that $8,000 mark. So, that was literally at the start of 2019. My end of year targets, I think 20,000 will look just like all those other little blips. And, I'm very bullish on Bitcoin. I think that it does really, really well in the face of uncertainty. And there's a lot of uncertainty in the stock market right now, as far as, as far as like what the Federal Reserve is going to do. There's some trade tensions. There's all kinds of different stuff. China's currency is getting weak. I mean, there's all kinds of bullish reasons for Bitcoin in general, but yeah.
It's very interesting. I mean, just think like the 2020 elections in the United States, I think are going to have a huge impact on everything. It's going to be so crazy what's going to happen during that time, from all kinds of different angles, internationally, market wise. So it's definitely something to look at as well, because Bitcoin will be going through its halving, or halvening, however you want to say it.
It's actually pronounced halving.
The halving. Yeah, it just sounds so weird. I like saying halvening because it sounds better than having. But anyways, so I mean that's going to be going on like exactly when we're in like the absolute thick of the election. So I don't know. I just think there's all kinds of different factors,
Not only that, but the biggest thing for me is 2017. I mean, I've been trading since 2016, and 2017 was a bull market in the face of massive FUD.
Oh yeah,
I mean,
China FUD. It was a meme.
China, Jamie Dimon, the fork on Bitcoin Cash. I mean, there's so much uncertainty with Bitcoin, but it continued to grow. And, there's a really good book called Secrets of the Wall Street Trader by Trader Vic, very, very bright guy. And he says the short and intermediate terms can be manipulated, but long-term trends cannot be manipulated. Nobody has enough capital to really, make those long-term trends, continue upwards or downwards, because it's just impossible to manipulate a multi-decade trend. And so the biggest thing for me is 2019, there's no FUD.
Yeah.
You've got Fidelity, you've got Bax, you got the stock exchange, you've got all these big players coming in, introducing financial products. So that's the biggest thing for me.
Yeah, that's definitely interesting and definitely going to be exciting to see. So that's all we got for today. Jacob, tell everybody where they can find you at.
At Jacob Canfield on Twitter and YouTube. I haven't been putting too many YouTube videos up, but also on TradingView, Jacob Canfield, Twitter, YouTube, TradingView. And then if you want to try Signal Profits, it's $7 for 14 days. You get access to everything, our Discord community, the trade platform, all the advanced training. Yeah.
Awesome. Well, thank you so much for joining us today. And that's it. We will talk to you guys later.
Thanks, brother. That's it.
Well, I hope you guys enjoyed that interview with Jake Canfield. It was one of the more information-packed interviews that we've had. Of course, his business partner with Signal Profits is Mark Moss, who was another favorite guest we ever had on the podcast, and we'll actually be able to see next week on the Crypto Fit Bus. But together with Signal Profits, they've created something that is not only good for people to make money trading and increase their Bitcoin holdings, but it's also good educationally for you guys to learn different aspects about trading. I know if I were to go back several years ago, I knew absolutely nothing about trading, and while the knowledge that I have now still isn't super expansive, it's growing. It's growing with every week, with every interview I do with a trader, with every trading episode I watch of a YouTube channel, or any tweets that I read from traders. Like, I'm constantly growing my knowledge, and I hope that you guys are too. Big shout out to our sponsor, Monarch Wallet. You can find them monarchtoken.io. Check out the new white paper you can find directly from their site. And until next time, thank you for watching Beards and Bitcoins, Crypto Podcast for the Man's Man.